right, all right. Good morning. Good morning. How are you guys all doing? Today is we're going to learn why it's such a great place to trade. Why trade futures? All right. The little marquee out front, the little title page says that we're going to learn about how and why it's so special and so great and wonderful to trade futures. And that's what we're going to talk about today. First and foremost, the most wonderful reason, number one reason, there are no pattern day trading rules in the futures market. You can open up your account with as little as 5,000. If you promise to stay in the micro minis, the brokerage firms will even let you open up your accounts with $2,000 to get started. But if you're going to trade the minis, you got to have at least as a bare minimum $5,000. But hey, that's a lot better than the good old stock market out there in New York City that requires $25,000. And hey, if you go one penny below $25,000, you get your account frozen for 90 days. We don't do that here in the futures market. The futures market, of course, is out of Chicago. They have different exchanges in Chicago than they have in New York City. New York City, you have what? You have the New York Stock Exchange. That's the one that everybody thinks about when they think, oh, I'm going to go day trade. And they think, oh, I'm going to go day trade the New York Stock Exchange. Well, you need to have at least about 30 grand out there to even get started. Why? Because they have pattern day trading rules. And if you fall one penny below $25,000 and you do a day trade, well, if you do 3 day trades in one day, or actually in 1 week, you're toast, man. They lock out your account for 90 days. We don't do that in Chicago. No, sirree. We don't do that in Chicago. We let you open up your account with as little as $2,000 to $5,000. And then you can trade to your heart's content. And you can even, if you fall below $5,000, they don't lock you out. They don't care. You just, we don't want you to fall below $5,000 though, because we don't want you to lose your money. We want you to make money trading in the futures market. Now, there's 3 basic exchanges out in New York City. Those exchanges are that's in Chicago. Out in New York City, there's the New York Stock Exchange, there's the American Stock Exchange, and there's the NASDAQ, right? Those are the 3 exchanges that you have out in New York City. All 3 of those exchanges require you to have that $25,000 bare minimum. And then out in Chicago, we have 2 exchanges, 2 primary exchanges. I mean, there's a couple more around the country, even one out in New York City. But the one that we kind of primarily trade are the Chicago Mercantile Exchange and the Chicago Board of Trade. Now, my experience, I'll pop up a little banner here just to give you a little bit of background. My name is Lan Turner. I'm a former instructor at the Chicago Mercantile Exchange and Board of Trade Education Centers. Now, it used to be there was a big competition between the 2, right? Between the Board of Trade and the Merc. We call the Chicago Mercantile Exchange, we call it the Merc, and we call the Chicago Board of Trade, we just call it the Board of Trade. All right. And those used to be a big competitor. And if you wanted to trade the S&P 500 in Chicago with no pattern day trading rules, you would do it through the Chicago Board of Trade. And then that was a big competitor to the Chicago Mercantile Exchange when I was out there. And that's when they started the Dow, all right, the mini Dow. And that was created to compete so that the Chicago Mercantile Exchange could compete against the Chicago Board of Trade that had the S&P 500. So they created the mini Dow over on the Chicago Mercantile Exchange. And those 2 were competitors. And my job was to actually help people learn how to trade those different markets. Okay. And so everything was going electronic at that point. And so they were moving everybody over onto computers. And my job was to help the traders out there learn how to trade on computers. And so that's how I got started trading in the futures market. Actually, I got trading in the futures market before that. And the way I ended up out in Chicago was because I was already doing that. So that's what I was doing. And I ended up out in Chicago teaching at the exchange education centers. And I did that for about 10 years. Okay. I taught out there between about 2000 and 2010, and then chased all around the country with a bunch of guys from the Chicago Mercantile Exchange and Education Centers out there. And we used to teach live seminars all over the country, everywhere from California to New York City to Florida, all the way up into Oregon and Washington. We used to go all over the world, mostly in Las Vegas, believe it or not. We did a lot of shows in Las Vegas. So what we're looking at right now, though, is we're looking at the Chicago exchanges. All right. So up there in the upper left-hand corner, we got the S&P 500. And up in the upper right-hand corner, we have the mini Dow. And down, so that's the 2 competing markets right there, right? But of course, the Merc bought the Board of Trade. So now they're both, they're under the same umbrella. And so down there in the bottom left-hand corner, we have the little mini Russell. All right. So we have little cousin Russell down there. And then, of course, down in the right-hand corner, we have the NASDAQ 100. All right. Now, the NASDAQ down here on the bottom, this is a micro mini. So this is a small account. Up in the upper, the other three markets are all mini accounts. So they're a little bit bigger. And I'm going to bring myself down here and make myself a little bit bigger, make this chart a little bit bigger. And what we're watching is we're watching the New York Open. Now, over in Chicago, these markets trade 23 hours a day. We only close them for an hour in the afternoon just to do the mark to the market, do our accounting, and then we straighten everything back out. We open it right back up again. So these things have been trading all night long, and you can trade them all night long. And there's no morning session, there's no night session, there's no after the close session. There's none of that stuff. We don't have that in Chicago. We don't complicate things like that. There's no time of the day where you can only use limit orders. We don't do that. You just trade, man. It's the last bastion of true capitalism on earth today. And you can trade with a very small amount of money, makes a large amount of money over here. That's why it's so wonderful. You don't need a large investment to make a large income. You can have a small investment makes a large income. All right. Of course, the knife cuts both ways, because if you can make a lot of money with a small investment, you can also lose a lot of money with a small investment. That's called leverage. All right. And so you have great leverage over here in the futures market. Let me show you what I mean by that when I say leverage, what that actually means. So this is the NASDAQ. This is the Dow. Let's just measure. All right. I'm going to use a dollar calculator. It's just a little on-screen calculator that we drag on the screen. And if I just take it from the low, this is very low, this trend up to where the market's currently trading, that is a $195 profit right there. If you'd bought right at the bottom of that point and up to that point there, it's a $195 profit right now, right here on the open. And you're like, but wait, Lan, how much money did you have to invest to make that $195? Well, this is the mini account, so it's a Dow Mini, and so you'd have had to put up $1,000. So for a $1,000 investment, you'd have made $195. I know, hard to believe, right? But it's true. All right. Now, same thing with down here. Now, this is a micro mini. So the micro mini is 10 times smaller. So if it's 10 times smaller, well, it's going to make 10 times less money, but it's also going to cost 10 times less money. So here you go. That's a $67 move right there in just that first few minutes right there of the opening bell. $67 move. How much would you have to put up? $100. So that's why you can open an account with as little as $2,000 and trade the micro minis, and then have no pattern day trading rules. Trade to your heart's content. Trade all you want. And we're trading the indexes here. And of course, there's minis and micro minis of all kinds of different things to trade. Now, in Chicago, you can't trade the individual stocks. You can't say, oh, I want to go trade Microsoft and then do that over here in the Chicago Exchange. You can't do that. But you can trade corn and wheat, soybeans. We got fun things like that. You can trade pigs, hogs, cattle, all kinds of fun things like that, right? Of course, you can trade copper and silver and gold. We got platinum and palladium. We got all kinds of really fun things you can trade. You can also trade all the currencies for those of you guys who like to trade foreign currency, like, I don't know, Canadian dollar, Japanese yen. We got all that kind of stuff too. All right. So Canadian, Australian dollar, New Zealand dollar, there's all that kind of fun stuff that's over here in these exchanges as well that you can trade. And then, of course, we got, like crude oil and unleaded gasoline. Those things are fun to trade too. And there's many accounts on those, and you can trade those with small amounts as well. One of the things that a lot of guys like to trade is Bitcoin. We have a Bitcoin mini, so you can micro mini Bitcoin. So you can actually go and trade Bitcoin with a small account. And it's a lot of fun to trade. So if you want your cryptos, you got your currencies, you got your meats, your energies, you got your indexes. There's all kinds of fun things you can trade over here. Now, we like to focus, primarily we like to focus on the indexes. We like the Dow, we like the S&P, we like the Russell, we like the NASDAQ. And I like to kind of watch those. And if you want to join us and subscribe to my channel, all you have to do is just hit that little subscribe button. And almost every morning we come in here and we trade these markets together. And we first start looking at just the indexes. Now, I am a school teacher, and like that little marquee up there said, I teach at Utah Tech University. And so this is kind of the lab for my university classes. And so I bring all my students in here and we learn how to trade. So we trade here as a learning environment. Now, if you know everything there is to know about trading, then you don't need trading instruction or help or learning how to do different things or, understanding these markets a little better, then you don't need this class. All right. You can go to one of those other guys on one of those other channels and you can watch them trade, because you guys are all, professionals, and you don't need help learning anything about the markets because you already know everything. So you don't need this class. But if you are somebody who's, maybe like a little help, maybe you've been trading for a while and you're not making a lot of money, or you're not doing well, or you need some, to fine tune your strategies, come and join us. And this is where you can learn how to do that. I've been doing this for almost 30 years. And so I can help you maybe fine tune something, maybe learn a little bit about how these markets work. And I can teach it. Been teaching at the university level for almost 12, 13, 14, 15, 16, 20 years. I've been teaching at the university for 20 years and taught at the Chicago Board of Trade, Chicago Mercantile Exchange Education Centers. I did that for about 10 years and been trading my whole life for about 40 years. So I've got a little bit of experience doing this. And so if you want a little bit of somebody who's got just, one or two lessons in the Sunday school lesson ahead of you, then come and join us. We'd love to have you. And we will learn how to trade. And that's what we're all here about, right? We're just trying to help each other learn how to trade. Now, what I like to do is I like to day trade for income. And if I can make a little bit of money here, I like to take it over and put it in the stock market and invest it for the long term. And so we go over and we do a lot of that too here on this channel. We learn a little bit about how to invest, all right, in the stock market as well. So it's not just strictly all about the futures market. We do go back and forth between the two. Now, just to give you a little heads up, what we like to do when we trade is we like to find times when the market's going to move. And so we have this little website that we look at. This is called tradingeconomics.com, and it's called Calendar. Now, I have no association with this. It's just one of those websites that tells you when the market's going to have some moving news. And so that's what really kind of moves the market. It's very important to realize and understand that the long-term trends are driven by the fundamentals. All right, the fundamental nature of markets drive the long-term trends, but we need to have a setup and a trigger. All right, we need to know what a setup and a trigger is so that we know when to get into those long-term trends. Because it's not just all about saying, hey, I think the market's going to go up, so I think I'll buy right now, and then wait and sit on your hands. No, we're going to day trade these markets. All right, so we need setups and triggers. In fact, we need a full series of strategies. So we're going to do a setup, a trigger, follow through. All right. Count, measure, setup, trigger, and follow through. That's what we do. What are we counting? We're counting the waves. How many times does the market have a tendency to move through a wave when it starts to trend? So that's what we're going to count. We learn that. And that's a very important component of learning how to trade, to count those waves. All right. Because it's all about the probabilities. How far is that market going to go? And we just kind of generally anticipate that a market's going to make 3 waves. All right. So we count those waves. We want to know where we're at in the waves so we know the probabilities. We measure them. Okay, we need to measure those waves so we know how big they are. If they're not big enough to make money, then we don't want to get in because the market's not moving far enough to get our stops to break even and continue to trend a little bit. It's not really worth trading, right? So we have to count, we measure, we use Fibonacci to measure. So if you've heard of Fibonacci, we'll teach you the proper way to use Fibonacci. And then count, measure, setup. Then we're going to look for setups, recurring price patterns like 1, 2, 3, ABC patterns, breakouts. You might have heard some of those, something like a triangle or a wedge formation. And we look at where those fit within the overall scheme of things, along with the count and the measure. All right, so where do those patterns come into play? All right, and then we do the count, measure, setup, and then trigger. What's going to get us into the market? What does the market have to do to actually get us into the market? So it has to trigger. All right, and then how do we get out of the market? Getting into the market is easy. Getting out with a profit is the hard part. All right, so we're going to count, measure, setup, trigger, and follow through, and that's what we learn in this class. All right, and then we want to do that. That's called technical analysis, along with our mathematical models like MACD and stochastics and ATR and some of those different indicators, right? RSI. We know how to use all those in combination with these other tools. And so that's what we do here, along with the fundamental nature of the markets to drive the long-term trends. All right. So if you want to learn that kind of stuff, this is kind of how we've been going and doing this. And this is our spreadsheet. And we learn how to track our trades, all right, over a period of time. And so in that, we have a nice little spreadsheet that we do here. And we follow our trades. Now, these are all this is our classroom account. So don't get all excited and all nervous and worried and upset and look at this. Oh, real money. This is not real money. This has all been demonstration money. We've been practicing and learning how to do this. You have to go to school and you have to learn, before you can jump in and start engineering, tanks and airplanes. You have to go to school and you have to do it in a simulated environment. First, we want you to simulate how to trade first and even how to track your trades and learn how to do that and see if you can be consistent over a period of time. And then you can start doing it with real money. We don't want anybody just coming in and saying, oh, wow, I learned all about the Chicago Board of Trade today. I'm going to start trading real money tomorrow. That wouldn't be a wise choice because, there's people out there who've been doing this for a while and they look at you like, fresh meat. And so we don't want you to be the fresh meat. We want you to come in. We want you to learn how to do this first. Count, measure, set up, trigger, follow through. Be smart about your trades. And then we learn and we track them all here. So even though we're doing a lot of crazy stuff in here, we still track it because we want to practice tracking as well as trading. It's not, it goes hand in hand. You can't just trade. You have to also track your trades. And so speaking of tracking trades, I want to show you another little tool that you might be interested in. It's the software I use to trade in Chicago. You have to have special software. It's not just, run over there and start trading off the software you've got. You got to have software that'll do this for you. And so the software I use is called Track and Trade, and you can go get it over here. It's just called trackandtrade.com. This isn't an affiliate link or anything. You can just go over there and download your live futures trading software. It's won Stocks and Commodities Annual Reader's Choice Award 6 times. I actually won it 7 times. I need to upgrade this graphic. You can scan that little code right there if you want to. Just hold your camera up there, your camera phone. Did you know you could do that? You put take your little camera, and it's got a camera on there. Phone, your little cell phone, and you put it on the camera, and you point it at these things, and it'll pop up a link, and you click the little link, and it'll take you over there. All right, so that's all kinds of really fun stuff. You can get over there at Track and Trade. So you get the stocks version too if you want to follow along. Now, these are not free software programs. I will give you that. These are more, they're professional level trading platforms. They're not free. So you don't want that free junk anyway. That's usually, there's a reason why it's free, right? Anything that's free is usually worth exactly what you pay for it. And so here we go. We're going to come in here, and that's what you need to get started. You just need a little piece of software. You need a little bit of knowledge. You need to understand what's going on. Go get that live future software. That's going to probably be the number one thing to help you get rocking and rolling here. And then, of course, we want to track our trades like this. And, of course, we want to be able to look at our economic calendar like this. And then we're going to learn what all these different charts are. Again, up in the upper left-hand corner, we have the S&P 500. Bottom left, we're looking at the Russell. Upper right, we're looking at the Dow. Bottom right, we're looking at the NASDAQ. Now, we're waiting for these markets to kind of rip and flow through a nice trend, give us an opportunity to get in. Now, I have a little cheat sheet here that I like to show people. And this is these are my slides for my show, because we come in here and we learn. All right, so these are my slides, and on here I'm going to talk a little bit about some of these different reoccurring price patterns. All right, so right off the gate, we're kind of looking for a pattern that looks something like this. We want to see the market running through a trend. We want to see a little pullback, right? And then we want to see it take off and run again. So this is what we want to do. We want to look for the market and make sure it's moving first. And once we see it moving and it gives us just a little hesitation in the trend, we want to try and use that as an opportunity to jump in and take off and go once again. And that's where we get in. So we might buy, like on this break, this red to green, first green candle, make a new high after the market's already started to move. Sometimes we'll follow these arrows, and we'll get in with arrows too. We have indicators that throw arrows, and so we kind of like to use that. All right. So there's different things that you can do here. Different ways of looking at the market and different ways of getting recurring price patterns. You might have heard some of these patterns, but the most important thing is that we have to know and understand when and where is the right time to get into these markets, the setups and the triggers. All right, so we're going to look for that. Now, oh, wow, look at this NASDAQ. That's really beautiful. Now I want to tell you a little bit about what's going on here on my screen. Because what we've got going is we've got what's called Heiken Ashi bars. All right. Now, Heiken Ashi bars are not here on the S&P 500. They're not turned on. And you can see the market's kind of a little bit choppier. This is a 1 minute chart of the S&P 500. You can see it's kind of choppy today. Not real exciting. So we got to be careful with that market. But some of these other markets, look at that, how clean and beautiful that is, that nice trend. And that's a nice, beautiful little ABC top formation right there. You can see it comes down, comes back up. And then, man, that thing just went all the way down like a train on rails. And had you jumped in right on that little break, just like we talked about, right, a green to red, you can. Now, the great thing about the futures market is you can go short just as easily as you can go long. There's no penalties for going short. There's no penalties for sell your stock, or you don't have to borrow the stock and pay interest on it and then to take a short position. You don't have to do any of that over here because it's called the futures market. And the reason we call it the futures market is because you can offset your position sometime in the future. Therefore, you can take short positions just as easily as you can take long positions on any market. We don't care. You don't have to worry about, oh, is it easy to borrow and all that kind of stuff. No, we don't do that over here. Again, it's the last bastion of true capitalism on earth today. And so we want to make sure that we're looking for these. Look at the Russell coming down, make that big, beautiful downtrend right there. Just for fun, let's measure that, okay? And we'll see. From the peak to the valley on that thing, that was a $615 move. Like, what? A $615 move? That was a 1 minute chart right there, okay? A 1 minute chart. $615 move. How much was the investment to make that $615 move? Well, that was $1,000. If you'd have put in $1,000 and taken that little red arrow, yellow arrow, let's put it in where the arrow's at, because you didn't get in at the peak. You have to get in down here where the arrow's at. So if you got in at the arrow and you got out at the arrow right there, that's $245 move. All right. So just a $245 move with a $1,000 investment in what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 minutes. That's pretty good money. $245 in 10 minutes. All right. So that's kind of how these markets move. That's what we're doing here, and that's why we like them. Now, you can make a lot of money really fast, so you don't have to trade a lot. You have to be really careful. We want to be careful because you can lose a lot of money too, so you have to be careful with that. And when we're day trading, we always want to make sure that we're using stop orders. All right. Stop orders are orders that get you out of the market in case you're wrong. All right. So we're just going to do a little trading here and just see if we can't find an opportunity for a market. Like this arrow's coming pointing down. So what we do is we say, well, I think that market might continue down. So we come in and we just sell and we get in like that. I'm a little late to the party, aren't I? I should have got in up there a little bit higher, but we'll see. It's coming down. It's hitting this right now. That's a 50 period moving average sitting in there. And that line right there is a 50 period moving average. It might bounce off of that. Has a tendency to hit these lines and turn and go the other direction, but we'll see if it'll fall just a little bit. If it won't, we'll get right back out. That's the whole name of the game. We just take our shots at it, and if it doesn't go where we think it's going to go, we just want to get right back out as fast as we can. All right, so don't let it take money away from you. That's the whole name of the game here, because the market doesn't have to move very far to make a lot of money. So if you just cut your losers short, take little tiny losses if you're wrong, then and then let your winners run a little bit, and they'll pay for your losers, and then of course eventually you'll catch one and it'll go and you make some money, and that's how you do it. All right. Markets can only do three things. I got this little graphic here. I think I popped this up earlier, but see this? Markets can only do three things. They can go up, they can go down, and they can go sideways. All right. And so if you get in and you think the market's going to go down, you ride it till it stops going down. If it doesn't go down, just get out. And you can get out anytime you want. You can come in here and say, oh, look, I'm up $30. Hey, $30, that's pretty good. I'm going to hit exit on that, take my $30. Of course, by the time I got out, I got $5. So, well, not the best, but hey, at least I got out with some profit. All right. So now the market's starting to turn. It looks like it wants to turn and go back up again. I don't know. Of course, it could just be making a little green pattern right here, and then it could turn and fall down again. You don't know, right? Markets can do three things. They can go up, then go down sideways. If anybody tells you they know what the markets are going to do, they're lying to you. They don't know. You just have probabilities. We trade the probabilities. Oh, look, it popped back just a couple bars. Now it's trying to fall once again. Now, let me talk to you a little bit about Heikin-Ashi bars. Heikin-Ashi bars are a form of candlesticks. They're not new, but they're relatively new compared to candlestick charts. Candlestick charts have been around quite a while. But this is kind of a form of candlestick charts. It's a little bit different. I'm going to turn them off so you can see. Watch, I'll turn that off. And now you can see that I turn the Heikin-Ashi off. Now, what's funny about this is you're now looking at it and say, well, that's a weird chart too, Lan. What have you got there? That's called a range bar chart. A range bar chart is a chart that each price bar is only a certain distance. It has no time involved. We don't know how long each bar is going to last. It's not like a 1 minute or a 5 minute or a 10-minute bar. What it does, it has, I call it a range bar 6 in this case, because you can set it to any time frame you want, and 6 is the 6 minimum moves. Now, market can only move so far in a certain amount of time, right? There's the minimum increment a market can move. In the stock market, it might be a penny, right? But over here, it's just an incremental level of which is the minimum amount that a market can move with each tick, okay? And so each tick represents a certain dollar amount or a certain number of dollars or pennies. Now, as the market moves, it can do how many of these minimum moves? Well, we said 6. So when the market moves 6 minimum moves, it'll make a new price bar. All right, so that's what these are, right? Range bars are minimum move bars. Now down here, you see I got this one set to range bar 20. So the market has to move 20 minimum moves to make one new tick. All right, so that's how that works. And then what I like to do is I like to put that Heikin-Ashi bar over the top of it. So I like to make Heikin-Ashi range bars. Now I know that's a unique style of bar. It's kind of a crazy thing, but look at how smooth and beautiful it makes these bars. And if you get nice flat bottom bars, that's generally the direction the market's in. If you get lots of topping tails and bottoming tails, these little lines sticking out the top and the bottom, that's not good. That's generally where the market's just going sideways. And when you see that, stay out. That's your idea. That's to stay out when the market does that. When the market's making topping tails and bottoming tails like that, you don't want to trade. Wait until the market starts making these little flat bottoms and little flat tops like that. See how that flat top, no bottoming tail? Oh, that's good. That's when you want to trade. You like that. All right. So, and then if you can coordinate that along with an arrow or some sort of an indication that the market's going to rally, move and go higher, or if it's going to fall and come down, you want to kind of coordinate that with these flat bottoms and flat tops. And then the core color coordination, of course, is very important as well. We like to look at the markets change from green to red, green to red. Of course, red means the market's down, green means the market's up. And you only want to trade when it's got flat tops and flat bottoms. Flat bottoms mean the market's going up, so you want to buy and go long. Flat tops mean the market's going down, you want to go short. And then you can trail your stop orders. Stop orders, of course, get you out when the market starts to move against you. So you want that market to just keep on trucking. All right. And the longer it goes, the more you make. So until it stops making flat bottoms, you stay in. It stops making flat bottoms, get out. That's kind of the name of the game. As long as it's making flat tops, stay into the short side. As long as it's making flat bottoms to the long side, stay in. Right. And then as soon as it stops making flat bottoms, just get back out. And if you kind of stick to that little rule as a beginner and a beginning strategy, doesn't even have to be a beginner strategy. Just kind of, that's an advanced strategy too. That's what we try to do. Been doing it for 30 years, and that's kind of the name of the game. All right. Just be good at picking when the market's going to switch and go the different direction and have flat tops, or switch and go the other direction and have flat bottoms. And then that's all you have to do. So you just kind of sit and wait for a time when you think the market's going to trend a little bit. And if it turns around, goes from red to green or green to red, and throw your order in there. It can only go three ways. It can go up, go down, and go sideways. And if it doesn't do the one you wanted, you picked one. And if it doesn't go that direction, just get back out. Just get back out. Take a tiny little loss and wait for the next opportunity. And then the next opportunity will pay for your loser and make you some money. And that's the name of the game of trading. And if you get good at it, it's like a video game, like your boys, like your sons, or like your daughters who like to play those video games, right? They get good at them, man. They can play for hours and hours and hours and hours and make all kinds of, fake gold. Well, you want to play fake gold here in the beginning, but you can just flip a button and then it's exactly the same thing. There's no change, and you start trading for real gold. All right. And that's how we do it over here. And if you want to come and join us, again, just hit that little subscribe button and you can come and join us. All right. And we like to have new people all the time. It's a lot of fun to have new people come and join us. Reason I'm losing my voice here. Just give me 1 second. I got to drink some tea. All right, let's go say hello to some of our class members. We got some class members that like to come and join us. And there we go. Old Gary Thomas saying hello. Good morning, Gary Thomas. Great to have you. Gary Thomas is number one, first place. And we got Michael Bruce coming in number 2 there with Michael Bruce. We got Kirk Schwartz. We got some long timers here. Great to have you. Kim Moss from the university classes. Great to have you. Kim Moss, great to have you there. We got a lot more people watching class than what's putting up their little marquees. If you guys want to say hello, I'll make you famous. Oh my gosh, look at that Dow up there. Holy smoke. Holy smokeroonies. That thing is making money hand over fist. Where were we? What were we doing? Oh, we were lecturing. Lan, you were lecturing. Look at that. Boy, that's a beautiful move. That Dow's been really the best market for us lately, hasn't it? Look at that. That nice move right there. If you got in on that arrow, that'd have been a $300 move to where it's sitting right now with a single contract with a $1,000 investment up 300 buckaroos. That'd have been some good money. How much time did that take? Well, these are range bar charts, so we don't exactly know because we don't know how fast it moved through there, but we can say that it was about 3 minutes and 17 seconds. All right, so 16 actual bars. 3 minute time frame. That was 3 minutes. In 3 minutes, it dropped like that. Where were you, Lan? Well, I was drinking tea and lecturing, saying hi to my pals. All right, let's come over here and look at the S&P 500. Sometimes we like to put on options. So if you like to learn about options, we'll do options here in this class as well. Look at this thing's trying to break higher here. The market's been going a little sideways down here on the NASDAQ. I'm not real excited about. I want to see it move first. But it is making flat bottoms. I think we could take that one right there. If I think it's going to rally. The way you do that, you just, see that? That lousy little bugger? Made two flat bottoms, then reversed on us and went red. So good thing I didn't hit that little buy button. I'm getting used to my mouse. I got me a new mouse. My old one, the button, you'd push it, and sometimes it wouldn't click. So I had to buy a new mouse. Just getting used to it. Moves a little faster than the other one. I had to slow it down. There it's trying to go long again. I don't really trust this NASDAQ. It's not trending nicely. It looks like it wants to break out and go. It's giving us some flat bottoms, but with the Dow coming down like this, I don't know why the NASDAQ would rally. That's kind of weird. Usually they kind of go like porpoises. They're kind of like the same. Not exactly the same, but usually pretty close. Look at the Russell over here, little cousin Russell. He's starting to fall. Got this little pattern in here where we got this nice little break like that. Got this little ABC pattern in here like this. I got lots of patterns we can look at. I mentioned to you earlier that we can go through and we can look at all these different kind of patterns. And we'll learn all about these things in this class. So if you're new to this class and you would like to come and join us, you'll learn all about all these different patterns that we can trade. This is kind of a fun one right here. This is the concave convex pattern. Most people not heard of that one. That's kind of a unique pattern that we talk about in this class. Of course, we got, wedges and patterns and triangles, and we got, I give them all kinds of fun names, okay? So this is like the triple sow cow. We got the cat's meow. We got the intercept. We got the flea flicker in here. We got this is the switcheroonie. This is how we castle. We've also got the king tut in here. We teach you the king tut strategy. We can teach you how to do the Christmas tree, and then we got the Balaam's ladder in here. We've also got all kinds of really fun stuff. Of course, we start off with the basics here, and we talk about what just is a bullish pattern or a bearish pattern, candlestick patterns. We got all kinds of examples and things that you can have. If you would like to have this, there's all kinds you can see in here. I got all kinds of, this is just my lesson plan books. It's just the slides that we use when we teach class in here. If you'd like to have my slides, they're free. You can have them. I don't even ask for your name. I don't want your damn name. I don't want your email address. What do I want that for? I'm not going to ask for that. All right. If you want to buy something from me, I got a magazine, a newsletter. Actually, it's the Club Class Magazine, and you can buy that if you would like and subscribe. And that's where we document all the stuff that we do in here. And so if you'd like to join us over here, you can go get a subscription to our magazine. It's an audio magazine. It's a multimedia magazine, and it's where we document all the work that we do in these classes. And so if we do something in this class, we then document it and publish it in the magazine. And you can get that for the first 3 months for only $1. $1 for first 3 months. If you don't like it, just cancel. Cancel before you get charged the $49 for an entire year after that. All right. So you get an entire year for $49, but you get the first 3 months for only $1 just to see if you want it. If you like it, if you don't like it, hey, cancel and you don't get charged the $49, but you get 3 issues to decide. You can scan again, take your little cell phone in here and scan that little code right there on the screen. If you scan that, it'll take you right over and you can jump in and grab that magazine. But this magazine is really great. It's a club magazine. But if you would like to have this document right here, here's how you can get it. It's free. Again, I don't care. I don't want your name. You can just have I don't want your name. Why do I want your name? I don't want your name. I don't want your email address. I don't want you on some mailing list that you're not going to open anyway. If you want to be a part of our club, hey, it costs $1. You go over and get Pit News Magazine. That's how you become a member of the club, and you come to the classes. Classes don't cost you anything. They're on YouTube. So I don't want your damn name. Don't give me your name. I don't want your email address. Just go over there and sign. You take your little phone and you highlight that, or you go over to pitnews.com/store, and then you just click on it and it uploads it for free. Now don't even ask your name. I mean, a lot of guys say, oh, it's free. And then you have to give them your name and your email address. I don't want your damn email address. Don't give me your damn email address. I'm not going to send you an email. It takes work and energy. I'm not wasting my time sending you emails. If you want to come and join us and be a part of us, and come and join us and be a part of us, have this stuff for free. It's just to help you. All right. It's just to help you be a better trader. I'm not going to send you a whole bunch of spam. Go get your Pit News magazine, and that's how you join. It's all for $1. That's the only time I'm going to ask for your name and an email address, is so I can send you my Pit News magazine. All right. And it's just all the documentation of all the great stuff we do when we trade here. So you're going to want that anyway. And then it's got audio. That's what's great about Pit News Magazine, is you can listen to them. You ever listen to a podcast and thought to yourself, man, I want to do that. And then, an hour later you get home and you completely forget, what was that URL he talked about? What was that stock symbol he said in that podcast I listened to while I was driving the car? You can't remember, and you don't want to go search through and scan all through that whole damn thing again. It's just, you just don't do it, right? Well, with Pit News Magazine, they've all got audio. All the articles have audio, but they also have all the written stuff too. So if we tell you about a great symbol in the stock market, or we tell you a great strategy that you want to learn, it's all documented. You can go back and get the paper version or the digital version of it and see the transcript and all the examples and charts and all that kind of stuff, all stuffed in there. Sometimes we even put video, show you example. Oh my gosh, look at that market take off. Now the NASDAQ's starting to, look at the NASDAQ go. Holy cow. Man, alive land, you made $5 today. You are really on a roll. Look at this. All these great opportunities that you're missing. I know. But you know what? You're doing better than I am. I'm just sitting here talking and lecturing and talking. And you're the one that's trading. All right. I've also got a book that's got all this stuff in there. If you want the book, go out and get the manual. This is the manual to the class. The manual to the class is out on Amazon. It's a 220-page. This thing that I just gave you for free, that's just the supplemental to the manual. All right. It just supplements the manual, because I wrote the manual, 220 pages of all this great, wonderful stuff about how we trade, the count, measure, setup, trigger, and follow through. It's all in the manual. Again, just scan that little code right there and it'll take you over, and you can pick up the manual to the class. All this stuff that's here, this is just supplemental to the manual. You need the manual to the class. All right. This is a class manual that we use at the university. And of course, you guys, if you're going to come and join us here on YouTube, you need to have this manual too. But go ahead and pick up the manual, and then you get the supplemental PDF that goes along with it. And they kind of work hand in hand, like brother and sister, like French fries and hamburgers, right? You got to have one can't have one without the other. All right, here we go. We're going to go down here. Look at that thing. It wants to break higher. No, it's just going sideways. Lots of bottoming tails, topping tails. It's not doing anything. That's that S&P up there. We could go put an option on that S&P if we wanted to. That's where we like to trade our options. We've been selling some iron butterflies lately, and we've been having some really good luck with that. Last week, I wanted to show you the spreadsheet. I had that up just a second ago, just as an example, but I wanted to show you what happened last week with our option spreadsheet. Let me pull that up real fast. It showed a big loss, but that was we were just cutting dead wood. We had some losers in our stock options. So here's our stock options. See that $2,500 loss? We had to close out some dead wood. We made $75 on our day trading. The other day we made $742 day trading. But this one we only made $75 day trading. We've had a little bit of a bad run here, a few bad days. But we're just testing things and doing stuff. This is where we've been doing all of our options on the S&P 500 over here in the futures market. That's been a really good run. We've made $8,300. Of course, this is all demo money. Don't forget, this is all just learning. We're just learning how to do this, and so we've had some good luck learning how to do it. So I've been doing these in my real money account and having the same kind of luck. So I've been really having a good time here in the classroom teaching these things, because I've been doing it in my real money account and having good luck too. So this is what happened. We cut the dead wood from our forest. We have some big winners we're hanging on to. So that looks bad today, but wait until we close out all of our big winners, because we got some big winners over there. Some big winners. And so we got like $10,000 in profits over in the stock account right now. We're not going to go look at that right now because we're looking at the futures market. But we got some stock trades going on over there too that we're really happy. That's just dead wood we had to clean out. So this is how we come in here, and you see these are our goals that we met. Now you can change this. I got it set to 2% right now. Usually we have that at 1%. A lot of guys would like to have 5%. They get pretty aggressive. Right now, if we just say 1%, our goal is to make $368 a day. All right, that's our goal. And you can see that our monthly goal so far at 1% would be $6,000. That's our monthly goal. And so far, we're up since we started doing this butterfly pattern, we're up $5,000 over the top of our goal. How about that for the month? That's pretty darn good. So you can see that we've had 14 winners. We had 3 losing days. You can see our 3 losing days there. 1, 2, 3. This is our losing days right here. Winners and losers come down here, running total $11,000. We've had 17 days of trading. That's a batting average of 82% and our win-loss ratio of 5. Okay, so that's been pretty good, and most of that's come from our options trading. We've been doing that on the S&P 500 here in the futures market, and we'll show you how to do that. Not today. Today we're just doing a little day trading, just looking at what's available to us on the day trading scale on this day trading front here. So we're just having fun, learning a little bit about the financial markets here in the futures market over in Chicago. All right, so we'll just kind of watch this. Look at that market. That thing was a nice, beautiful run. If you'd have taken that run from there to there, again, let's go in here. Now, this is a micro mini, so how much would that have been? Just take that arrow up to that red dot, up to that red bar. That'd have been $69. $69. Holy cow. Yeah, with a $100 investment. That's all you'd had to put up. $100 and you'd have made 69 bucks. That's crazy money. That's crazy money. Unbelievable. All right, now the market's just kind of wandering sideways again right here. Look at that. It's just making little reds, greens, red, green, red, green. What's it going to do? Which direction it's going to go? It's all like a carnival game. Just come and play the carnival game in my tent. Okay, this is where we're going to throw darts at the market. All right, so market starts to go up, you want to get in. Market starts to go down, you want to get in. One way, you just have to pick the right direction. That's all it is. Just pick the right direction. If you think it's going to go up, you get in. How do you do that, Lan? Oh, it's not so hard. You just push a button on the screen. You just have to do it. Push that button at the right time. That's the name of the game. Just know when it's the right time to push that button. It's not hard. It's not like we're out digging post holes in the hot sun. But it is hard because you have to be good at it. You have to kind of wait for the right setups. That's why we look for setups, triggers, and follow-throughs, and we'll spend some time learning what those are. But today we're just going to kind of watch the markets move through some of these trends, all right? Look at this little trend. This is called an ABC pattern, all right? So let's start up here. This is A, B, C. So when it does that, you kind of look for and anticipate the next leg. See how that measured down to 100%? So that 100% from C to 100 is the same distance from A to B. So that's what we kind of anticipate. We kind of anticipate that if the market's moving well, it should move through these ABC patterns. So this is what's called a trend. So this down here, this is called the trend. This is called the counter trend, and then this is called the trend. All right, so you got the trend, the counter trend, and then the trend. All right, we got some indicators in here. That little purple line right there, if you see, that's called the VWAP, volume weighted average price. All right, so it's just an average of the market, but it's got the volume included. Volume's important. We want to look at volume. That's this little indicator down here at the bottom. It's called volume. All right, it tells us how many people are trading this thing. Volume starts to drop off. That means fewer and fewer and fewer people are trading it. Now, as the market comes down to the bottom of that projection tool, you saw that little projection tool. That's a really cool little tool. That's called Fibonacci. All right, that's a Fibonacci projection tool. All right, so we measure the ABC pattern. It projects down here to 100. That's a Fibonacci number. 130.9 is actually our golden ratio on the Fibonacci scale. The market likes to go to 130.9, believe it or not. Now, why not 131? Wouldn't that be? Why don't you just say 131, Lan? Well, I guess for the same reason that we say, this little book of yours that you buy costs $19.95. Why don't we just say $20? I don't know. Heck, it's just one of those things. It's just one of those things. It's a mathematical model made by a Fibonacci sequence. And so that number doesn't come out to be 130. It comes out to be 130.9. All right, 128.9, 130, 130, 61.8. All kinds of funny numbers, but that's because it's a mathematical model. For us, though, when we use it for trading, we're not building an engineering building that might collapse on someone. We don't need to be perfect, right? It's just kind of an art more than it is a science. It doesn't have to be exact. So we're just kind of watching these markets come through. We draw our trend lines. We put our trend line across the top on a downtrend and across the bottom on an uptrend. And we just kind of want to see the market break those little color codes right there. And if it goes green, we could get in and say, oh, I think it's going to continue higher. You just wait for it to go green, red to green. First green candle to make a new high. That's a buy signal after a nice long uptrend. You say, well, it might continue and continue higher. It started up, goes down, it start up again. It might go again. But you want to kind of see it have a little bit of oomph in there. It's not giving us any of that oomph I'm looking for. Come on, give us a little oomph in there. Looks like it's kind of trying to die right there. Oh, come on. You gave us a green candle. Don't you want to continue higher? If it does, we'll just get in there and try it. Let's see. And we'll put a stop order in there. I'm going to drop this stop order. I got it programmed in. That's why we have computers, right? Because we can program it. So we program that little button. These QOCO buttons are called quick OOCO. One cancels other or one triggers other. So that's going to be programmed in there. And I just dropped it in there on the screen. You can see this is a drag and drop trading platform. It's probably why it's won Stocks and Commodities Annual Reader's Choice Award 7 years, because people like it. All right. And so I dropped that in there. It'll automatically trail on that yellow dot. If that market doesn't continue to go up, well, it comes down and hits my stop. I just get out, just take a real small loss. But if it goes up, it'll just sit there and trail up on that yellow dot, just like right down here. If we'd have got in our short position, it just kept going down, and then our stop would have trailed down on that yellow dot until it intercepted down here at the bottom, and then it would have got us out automatically. Well, if this market will do the same thing, if it'll just take off and go to the moon, we would like that. And then that yellow dot would just kind of trail up behind it. And then our stop, because it's attached to that yellow dot, automatically, see how it just moved all by itself? I don't have to move it. It just does it all by itself because I programmed it to do that. It's just going to follow those yellow dots. At this point, I just sit back, relax, drink some hot tea, and watch the market trade for me. I don't have to do anything. All right? Very simple. Not hard at all. The only thing we have to do is just do it at the right time. Our job as the trader is just to decide when it's going to move, and then just ask the computer to trade it for us once we make that decision. All right? And so now all I can do, I don't have anything else to do but sit and drink my tea. Let the computer trade. If it wants to make me money, great. It's going to make me money. If it doesn't, it just gets me right back out, and I'll try it again later. So right now, it's sitting there at about a $55 profit as it comes up and it touches that little green line. That green line is a 100-period moving average. A lot of times people will use that as an area of support or resistance. Now, the next one is a 200-period moving average. If it touches that 200-period moving average, you could say, hey, I'm going to take my profits. Because a lot of times it'll go up and hit that 200-period moving average and flush back down. So you just say, well, I'm going to get out right there. Now, you don't have to get out. You could stay in longer and let that stop trail up. But that's a good spot to get out. We just made $100, $110. So that's not too bad. I just took it off. All I did is hit that little exit chart button and just got out when it touched that little blue line right there. That's all I did. Now, does that mean it can't continue higher and go up past that blue line and go all the way up to the purple line? Yeah, sure could. Would I leave that much money on the table? Yeah, probably could. But could it turn and flush right now too and then come back and stop me out with a $25 loss instead? Yeah, I could. Or $25 profit instead of a $100 profit? Yeah, I could do that too. You know, the market can do anything it wants. All you have to do is just learn how to throw the darts at the balloon, and you know, if you hit one, great, pop the balloon. If it doesn't, well, that's the name of the game. We're just throwing darts at balloons right now. But notice that we have a little bit of a pattern in here, and this is what we look for. See this market, how it's come down and then it went sideways, it come down again, it come down up here, up a little bit down, a little bit sideways, a little down. Now it's turned around trying to go back up. See how it went up, made a little down, little up like that. Now it's making a little down. Well, we expect it to go do one more of those. It might do one more of those. The last one's usually not as big as the second one. So where the second one was this long, we'd kind of expect the third one to be a little bit shorter, but, you know, trying to come up and break again. Doesn't mean it has to. That's just kind of what we anticipate. We kind of like to see it move in threes. Markets like to move in threes, believe it or not. So kind of keep that rattling around in the back of your head, because markets like to move in threes. Doesn't mean they have to. They might just go up to, they can do anything they want. But then it might come up, make a little ABC, and do one of those little ABCs again, just like it did here. See that ABC right there? Just like that. No big deal. Well, might do that. This also makes another little pattern when it does that. These little patterns just kind of pop in here. They call that a head and shoulders formation. That would be your left shoulder right there. That'd be your neckline. That'd be your head. That'd be your neckline. Comes up, makes a little right shoulder, and falls once again and continues the ABC to the downside. See that little AB? Oh, what's that doing right there? Just kill that right there, Lan. That's this one you want right here. So if it makes that right shoulder and falls back down like that, that'd be a little head and shoulders formation in there. See how that little pattern made a left shoulder, neckline, right head, neckline, right shoulder, drop. So it might drop like that, and that'd be the first red candle to make a new low would be that right shoulder, and you'd expect it to come down and break that neckline. That neckline is called a trend line, okay, just like we said before. So we take that off. Let's get that off of there. And that would just be a nice little trend line that comes up there. And if it breaks that little trend line up in there, you could anticipate it falling. Now, a lot of people will look at this as an opportunity to buy right here. They'll come in and they'll say, hey, I think I want to get in on a long position right here. And those little red across our beautiful little yellow dots right there, right? So that could be another, oh, this is drive 1, drive 2. This could be our drive 3. So we could look for this market to come up. If it breaks above that blue line where it stopped last time, we might expect it to keep on right on going. Okay, so those are these things we look at when we're trying to trade. These decisions you have to decide on what you want to do. But each time you get in, it might cost you a little bit. You know, you're going to have to pay a little bit of that money you made. You made $115. How confident are you that market's going to go and make you more, or is it going to come down and take a little bit away? All right, so, well, see, we might have been good to get in right there. Go for that third drive. It's going to come up and test that blue line one more time. Sometimes it'll come up and test those, like right here. See how many times it's tried to break past that magic blue line, that 200 period moving average right there. 1, 2, 3. If it can't break it, that's a bad sign. It's a failure, and oftentimes that'll mean the market's going to cascade back down, or it could just sit there and wander sideways. That's the risk you have to take when you're trading. You have to decide whether you want to take that risk that the market might now flush. It's tried to break that blue line 3 times, and it failed all 3 times. So that means that's a strong area of resistance. And if it can't break above it, well, then market usually turns and falls. I'm just going to try it one more time. Watch this. It's going to go up there and try and break that blue line one more time. Look at that. Draw a little line across there. It's going to try and break that trend line right there. Let's see if it can do it. If it breaks above there and holds above it, what it'll probably do is it'll probably come up, and you might miss it, but it usually comes up, then it comes back down. Use that as support area, and then it turns and goes to the next line, which is up here. So we're going to watch and see if it'll do that. Now, I don't like to take the first breakout. A lot of guys do. They'll take that right there. They'll say, hey, look, it broke out. Let's get in. And they jump in. That's why that market popped like that. And so they'll take that first break through that hard line right there. But I like to wait and see if it's going to hold up there, because sometimes it goes up like that and then it goes poof, flushes like that, like a toilet. So you have to be really careful, because you don't want to get caught in the swirl of a toilet. That would be a nasty thing. So what I like to do is wait for it to see if it's going to come back down and if it's going to hold above that line. So I'm going to look for that to be a support level. And then as it turns right here and starts to go up, that's where I like to get in. Now I can put an order in to trail along here if I wanted to. I go in there and put that in there just like that. And if it breaks above that, makes me a green bar, breaks a new high on the red side, I like to get in like that. So we're going to wait and see if it'll do it, okay? If it doesn't, we just get right back out again. Don't worry about it. We'll just take a tiny little loss, all right? Have to give up a little bit of what we made. We made $115. So we want to see if it's not going to break now. Use that as an area of support, and then go up. If it fails and just breaks on through, well, we're not in the market. This is just a contingency order. It's called an intercept order. It's going to intercept only if the market turns and starts going back up again, makes a green bar to go up. Now, it doesn't have to be a green bar. It could just be a red bar. It's just got to be a bar that breaks above the previous high of the previous bar. That's how that's working. Let me blow this up a little bit bigger so you can see it. Now, no telling if it's going to do it. I don't know. I have no idea. All right. I don't have any magic wand that tells me what the market's going to do. Been doing this for 30 years. And the one thing that's told me is I don't know a damn thing about what the market's going to do. All I can do is trade the probabilities. All right. I see these little patterns. I've seen them 1,000 times. And that's what the market generally does. I'm going to put my stop in. If it doesn't go, I just get out. See? Failed. just got out. I'm not going to sit there and hold on to it and let it come all the way down here and lose a whole bunch of money in anticipation that it'll go back up. Don't do that. That's a bad way of trading. And now that failed right there. So the only other strategy is if this thing comes in here and breaks above that green line, that green bar that faked me out right there. If it breaks above that, I'll try one more time. And if it doesn't go on that one, then I'm done. That pattern's over and it failed, and I'm not going to trade it. All right, so I got a couple little opportunities in here. I got 2 opportunities. If I take those 2 shots and it doesn't work for me, then I'm done. So it's not going to break. It's going to fail. It's going to come back down. Well, that looks like a failure. Okay, we exit chart. That didn't cost me anything to put my order in there in anticipation of a breakup. See, we got that one little opportunity, the possibility that thing's going to go up, and it failed. So it didn't. We just got right back out. Now we're done. We're out. That thing failed. Now we have to wait for another opportunity. Well, that's how it goes. We were up 115. Now we're only up 75. We tried. Didn't work out for us. We wanted to see it break above that, off that blue light and take that blue line and take off. And it flushed and it failed anyway. Now it's coming down. It pulled back a little bit farther. Now it's trying to break again. Now it's got that blue line up there. One more time. Let's bring that back up. It's got that blue line it's trying to play across, isn't it? Now it's got that blue line right there as an area of resistance once again. Come up, touch that blue line one more time. Now what's it going to do? It's playing around that blue line. It's like a fish playing with our bait. All right. We're fishing. That's our bait. We want to see what it's going to do. Keeps nibbling on it. Keeps nibbling on our bait. Are we going to catch it? Or is it going to take our bait? It already took us once. See if it wants to go again. If it doesn't want to go again, well, nothing you can do about it. Let's go look at a different market and see if something else is moving. It's being a little snaky here. It's not being really strong and not being really powerful. We want a nice, powerful market. And usually that's the news events that cause those powerful markets, right? It's those news events that cause the market to be a powerful moving market. And we don't have a lot. Let's come see what the news is doing. We didn't talk much about it other than just to say that that's what it was. So at 7 a.m., we talked about the home prices. If you come in here, the forecast was B.8 and it was 1.6. That means if you wanted to buy a house, that's bad for you because prices of homes just went up. All right. Forecast 7.5. This is year over year, 7.4. So actually year over year, they went down. Just month over month, they went up. We got the Fed Cashierian speaking at 7:55. That was at 8 o'clock this morning. So that's over with. Consumer confidence came in at 8 o'clock this morning. Consumer confidence forecast to be 94. Came in at, consumer confidence was good. That's why we get a little bit of a rally in here, I think. That's probably moved the market. People feeling a little bit more confident about the markets. So we got the Dallas Fed Manufacturing Index. That was at 8. That's coming in 5 minutes. Now, that's not, none of these are big red movers. See, these red ones are the ones that really move the markets. See that? We got on Friday, we're going to have some real big market movers. Thursday, right here. Friday, Wednesday, Thursday. Thursday, we got GDP growth rates coming in. Forecast is 1.6. The previous was 3.4. So growth on the, looks like GDP is coming down. Previous was 3.4. It's now forecast to be 1.6. That's a big mover. Of course, that's going to be at 6:30 in the morning. If you're up and awake and trading at 6:30, you can trade at 6:30 over here in the futures market. Now, you can trade in the stock market too, but you can only use limit orders, remember? Over here, you can use whatever kind of order you want. Market order, limit order, stop order. It's all available to you. All right. So what we've got coming up here, we got Dallas Fed Manufacturing Index is coming in about 4 minutes. Forecast be negative 14. Previous is minus 14.5. We don't have a consensus. We just have a forecast. Forecast be down. That's not good. We don't want that to be down. So let's see what's going to happen here. This is the Dow again. We're just kind of watching it bouncing around past that blue 200 period moving average. Now, if we'd have taken a little trade right there off that little ABC top formation, this thing might just flush right here. If it flushes down, that's that little peak up in there. See that little head and shoulders formation coming in on this one too. So this would be your left shoulder right here, if I could draw it in there. Left shoulder. This is your neckline. There's your head. There's your neckline. There's your right shoulder. And that thing's trying to break across that natural trend line across the bottom. See that? So that's because the definition of an uptrend is higher highs and higher lows, right? Definition of a downtrend is lower highs and lower lows. So when it made that little switch from making an uptrend, higher highs, now making lower highs, that's the break right there. That's a confirmation the market has changed from an uptrend to a downtrend. Notice how we had three little drives in here. There's drive 1, there's a counter trend. There's drive 2, there's a counter trend. There's drive 3. So that was the peak of the third drive. Now it's coming down. It makes an A, B, C pattern to the downside. That's called an Elliott wave, all right? Elliott wave. For those of you guys who want to be specific about your patterns, that's an Elliott wave pattern. And the top of an Elliott wave pattern is a head and shoulders formation, all right? It's an indication the market has changed from bullish to bearish. All right, so let's come in here and see. If we'd have taken a short position right there, Lan, why didn't you do it? Well, because it was hard. Had to push a button at the right time. That's a $70 move so far, and I didn't take it. Look at it go. There's our little 1, 2, 3 top formation. We use the Fibonacci ruler to measure. All right, A, B, C. From A to B, we go from C to D would be 100 right here. And then if it goes just a bit beyond that, we like 130.9. If we draw a little horizontal line from 130.9 all the way back, where does it go? All the way back. Oh my goodness, look at that. Right back to the previous low would be 130.9. You think it's going to go down there? Went down and touched that 100 just like a train on rails. How about that? Just like a train on rails. Now what's it going to do? Sometimes it makes 3 down, but usually it makes 2 down and then goes sideways. So I just kind of expecting a little bit of a sideways market till this. But we got that A, B, C. That's drive 1 down, drive 2 down. We could get a counter trend and a third drive down. Who knows? Nobody knows. But if it changes and makes the right colors, you could put it in there and see if it's going to do it. All right. Costs you a little bit of money just to try it. Are you willing to spend a little bit of money to make a little bit of money? That's the name of the game. You got to spend money to make money. We just want to be making sure that when we spend our money to find out if the market's going to do what we think, that we do it at the right time. And that's the whole name of the game. That's all you have to do as a trader. You just have to decide when you think that market's going to move in your favor. And you put your little button, you push your little button right there. And if it doesn't go immediately in your favor, just get out. There's no reason to stay in there and hang on. We got this little mathematical model down here. This is called the MACD. Now the MACD comes down and it kind of tells us, hey, this market's getting pretty low down here in this low region. So it's turning green. See, that means it says, hey, it might just be going back up right here. That'd be a good spot to be looking for this market to go back up. Well, we got a news report coming in right now. We want to see what that news is going to do, because it could also be a go down too, right? It could also be a go down. It could be a down, a little counter trend, and another go down. So you got to be careful. Not every green to red or red to green is a go up. It's just a temporary go up. And it's got to go up or down far enough to get your stop move to break even, or else it doesn't do you any good. So you need an active market. If it's not active, this isn't really that active of a market. But if it's active enough, it's active enough to let you make a little bit of money, but we like a little bit more action. So that's what these news reports will do. They make the market move a little bit more action. There's that third drive coming in there. There's that break going from red to green. You didn't take it again. There it goes. Whew, down it goes. So there's your 3 drive pattern. There's drive 1. There's your counter trend. There's drive 2. There's your counter trend. We're working on drive 3. All right. So here's your low point right there. That's going to be its next. Oh, that's not the one I wanted. I wanted this one. So there's our next stop sign right there. If it comes down, it's going to test that low point right there. But you also have a stop sign right here. See this previous low right there? And sure enough, it went, oh, why is that thing not working the way I want it to? Grab that right there. So there was our other stop sign. See that? It came in and it stopped right there, right against that other previous low right there. Now it's just being a little crazy. We're waiting for the news to come in. So here we'll bring in the news. 8:30. Oh, it came in negative, minus 19.4. The forecast was minus minus 1.4, and it came in minus 119.4. Fed Dallas Manufacturing Index. So it's not good. So that's negative news. So look at that. What's funny is the market's rallying on negative news. Why would it do that? Well, because it already fell in anticipation of the negative news. And maybe that's as far as they thought it needed to go to cover that minus 19.4. Now it's starting to go back up again. Who knows? Well, it's never our job. And I always say this, it's never our job to try and decide whether that's going to move the market up or down. It's the big boys that make those decisions. All right. We're just a little gnat on an elephant's ass. And so all we can do is go for a ride. They decide whether the market's going to go up or down. All we do is jump on and go for a ride. Okay. And if they look at those numbers and they think that's good and they want the market to go up, even though we look at it and think it's going to go down, it might not have been as bad as they thought it was going to be. And so then they're like, hey, that's not as bad as I thought it was going to be. So then the market goes up. So that can happen too. We look at it and think, oh, those are bad numbers. The market's going to go down. Nope. The big boys thought the market that was not so bad. And so they pushed the market back up again. Again, we're just a fly on an elephant's ass. We can't move the markets. All we can do is get on and go for a ride. Look how it came back right back up to that 200 period moving average once again. It hit that 200 period moving average one more time. Look at that. It's come up, tested it, failed. Come up, tested it, failed. Is it going to go up and test it one more time? Test it, and then go. That's what I'd want to see. But if it fails, it could flush right now. Look at your little mathematical model down here. Greens turn around. Stochastics is up, turning time to curl and come back down. Don't overtrade. Don't overtrade. Lan, I know I'm not trading off. But hey, we got 7 hours of this day. We don't need to overtrade. Yeah, Michael Bruce says this market looks pretty dead to him. Yeah, it's not exciting today, is it, Michael Bruce? We got a little quiet market. We could probably do some options. We could probably sell some premium. See how that would help us out today. We're getting a little ABC right here. This thing's trying to pull back and break right there. First candle to make a new high off that little pullback. Trying to break above those natural moving averages. Just not got enough oomph in there to go, does it? Oomph. You could try it. You could say, well, I think it's going to go, Lan. Well, it's going to cost you a little money to find out. And if it doesn't, that's the money it costs you. If it goes up, doesn't go up. But you can't make money if you don't get in. So you can get in, you can try it. And then you just make sure you put your stop in there and say, well, if it doesn't go immediately in my favor, I'm just going to get right back out again. So you can get right back out again if it just doesn't go. If it fails, just get right back out again. Well, and it failed. It didn't go. So we gave up a little bit more money, just trying to see if it wasn't going to break for us right there and go up and try and break through. And so it's failing and coming back down. Now, remember, a failed pattern is oftentimes the best pattern in the other direction. We were looking for that to give us a little ABC pattern and looking for it to break and go up, right? We wanted to see it go up. Well, it failed. Oftentimes, that's the best pattern to the downside. So now that market might just flush, and we could take a short position if we wanted to. That's called a reversal position, and we could have definitely done that, but this market's just not really doing anything, is it? It's not going up or down. It's just kind of fluffing around in here. Let's go see if any of these other markets are doing anything. Not really. That Russell is not doing anything either. It's just going sideways. Everything just kind of died, and we got Fed speaking this afternoon at 11 o'clock, so 8:30 until 11. We still got 2.5 hours before the Fed speaks, and they're not really going to change anything. They're just going to give you a little motivational speech. So we could come in here and put on our option strategy if we wanted to. Why don't we do that? We'll come in here, and we're going to come in. This is the S&P 500. This is a 1-minute chart, and it's hanging out right here close to all these moving averages. Let's go in here to the option strategy, and we're going to come in, and I'm going to go to a 0 days till expiration, and we're going to sell a call right at the money. Oh, that's about as close as we can get. Not really optimal, but I want to show you how to do it. So we'll go in here and sell that, and we're going to sell the call, and we're going to also sell a put. We just drag and drop those options on there too. It's called a drag and drop options trading platform. You can also have your options chain. It's down here too, and we can come in and we can look at the puts and calls, and we can come in here. Let's see. We're going to go out here. Let's just go to a 3-day option, and we're going to come in here, and on the puts, we're going to buy one. All right, let's go put this one on first. Let's go ahead. We're doing it backwards, but that's okay. I'm going to come in here. I've been trying to do these with market orders, and I think I'm going to try and do it with a limit order. We're going to buy them. They're asking 15.10, so I have to go all the way up to 15.10. Oh my goodness, look at this. 15. Well, that's not bad. 15.10. See if we can get it. Take it. Oh, we're going to sell them, so we can't go to the. Oh, I'm sorry. I'm going backwards. No wonders that was too good to be true. We're going to come down here to 14.30. 14.30, 12.50. Let's go ahead and see if they'll take that one. Nope, they're not going to take it. Let's edit it. 14.20. There we go. We got them to take it at 14.20. All right, now we've gone and sold that. That's bad because now we have like a $12,000 margin. So we got to go reduce our margin. We should actually put the outside wings on first before we do that, right? Before we put the solds on, so we don't have that big margin bump all of a sudden in our account. So we're going to go out to a delta of 20. And we're going to do, no, those were 0 days. Okay, so we want to go out here about delta 20. There's a good $19,345. We're going to go ahead and we're going to buy that one. We just do it right here. So we'll just go buy. And then we're going to do limit on that. Since we're going to buy that, we have to go to the ask at 685. So I'm just going to go up here to 685. Go ahead and place that in there. All right, we just bought ourselves a put option. Now we got to go buy ourselves a call option. So we're going to come up here to delta 20. And if you guys are new and you don't know what the heck I'm doing, that's okay. Just stick with us. This is just another strategy. We're going to come in here and we're going to buy one of these. And this is all documented in Pit News Magazine. If you guys want to come and get that, 435. Let's just go ahead and place that order. There we go. All right. So now when we come over here to our positions, you can see we got our Wild Eye, Crazy Eye, Iron Butterfly. And I put those on separate tickets. Oh, crap. I didn't want to do that. Let's go ahead and we're going to come in and manually link those two. We want to manually link 9245. 9245, that's what I got, with 9294. So we're going to grab 9294 right here. We're going to add that to a single leg, and we're going to connect those together. Apply and close. All right, so now we got those on the same ticket. So now we see that this is our straddle and our strangle. We sold the straddle and we bought the strangle. Okay, so that's what we're doing. And we're not going to hedge. We're just going to let this thing go. We could hedge. We've been hedging, but we're not going to hedge today. We're just going to let it go and see how it goes. And we're going to sell this premium and collect premium. Or in there, we can see our max cost basis on there is $700, which is a negative number, which means they're going to give us that $717. Now, we had to pay $560, but because we did 3 days, we'll get most of that back. So that's the idea, right? It's just an insurance policy in there to lower our margin requirement. So we're in here with a $717 profit potential. And we're going to take this off at 20%. Let's do 25%. I'm going to come in here, right click. We're going to say liquidate. And we're going to say, we're going to liquidate this I got to change that until it says 25% profit. Okay, so we're going to come in here. And what would 25% be? We just run that up there real fast. Oh, you guys can't see that. Let me come over here. Move me out of the way. There we go. See my numbers down there? Okay, now here's my little calculator, and I'm going to change that calculator so it says 25%. 21, 2, 3, 4, 25%. So when it makes $180, I'll just yank it off of there, all right? They're going to give me 717, and I'm going to take it off once I make 180 of that. So that's 25%. I'll go ahead and place that order. Now, if I take that off, hopefully that'll come off before the Fed speaks and make my $180 before the Fed speaks. And we'll just let that baby run. There we go. All right, guys. I think I'm going to let you go for the day. I do have a Sunday school lesson for you. If you want to just wait on, give me one more second. I'll give you a Sunday school lesson. Right, there's our Sunday school lesson. Let me put me down here so you can see it. It says, a trader's state of mind. Avoid distracted trading. All right. Don't trade during negative life events. If you're having a struggle with your life and things are up and your mind can't stay focused on what you're doing, don't trade. Don't come in here and try and think that you're going to be able to focus and trade and think well. That's oftentimes when you're angry, you're upset. That's where you start doing this revenge trading, and that's a good way of losing money. So don't do that. It causes big losses. So take a little time off. There's nothing wrong with taking a day or two off during the trading market. I know sometimes we're like, oh, well, I took my weekend off. But if you had a bad weekend or something, don't trade on Monday. Yeah, take that Monday off too and walk away for a little while. Go out, go fishing, do something that's going to calm your mind. All right. And then when you go on vacation, go on vacation. You know, I see a lot of these guys, it's like, oh, I'm going on vacation, so I'm going to take my computer and trade on vacation. Well, that's not a vacation. That's just trading somewhere else. Go on vacation. If you're going to go on vacation, leave your computer at home and go on vacation. Oftentimes when I go on vacation, I try to leave everything at home. I don't take nothing. I don't even take an iPad. I don't take nothing. I do take my cell phone. Got to take that, but I don't take anything. Don't take my laptop. I don't even take it with me. I'm on vacation. That's work. Leave it home. All right. See if you can't do that sometime. Go on vacation. Leave that damn laptop home. All right. Don't trade if you're on vacation. That's what vacations are for, is to get away from the market for a little while. All right. Makes it special when you come back to it. Don't take it with you. All right, guys. That's my Sunday school lesson for today. I'm going to put this up here. You can see we're up $10. $10 on our sold options. We're up $2. Looks like that's where we want it to be, about break even on our bought options. That's just the insurance policy. And I'll let that run. And tomorrow, come and join us, and I will tell you how this thing turns out tomorrow. All right. You guys have a good day, and we got a few hours left to trade, and see if these markets won't move a little bit when the Fed moves, and if there's a buy or a sell opportunity, take them, but don't take a big risk. If they don't just keep going in your favor, just get out. All right. You can always come back tomorrow and do it again. We'll see you tomorrow.